Hey everyone, it is Julie here with TipRanks, and today we're taking a look at the newest analyst ratings ahead of some big name earnings reports. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. We are in the midst of earnings season with hundreds of companies reporting every single week, and this week includes some of the biggest names in tech. That is Microsoft, Google, Apple, Amazon, and Meta platforms, all reporting within the next couple of days. Now usually after an earnings report, we'll see a flood of analysts reiterating their price targets once they've had a chance to digest the news. But this week we already have several analysts weighing in ahead of those earnings report. So today we're going to take a quick look at these companies, what analysts are predicting for this upcoming quarter, and of course how the rest of Wall Street weighs in. So let's jump right into these big tech names. We're going to start things off with Microsoft, who is reporting tomorrow on January 30th after hours. With a current market cap of over $3 trillion, Microsoft trades under the ticker MSFT, currently priced at $407 per share. They've seen some steady growth this past year, currently up 69% and continuing to climb in the last few months. Microsoft will be sharing their second quarter results tomorrow, and analysts are anticipating a year-over-year increase to earnings. This follows a pretty strong Q1 back in October as well. Analysts will be looking for earnings per share of at least $2.77, which is about a 35% increase over last year's. This follows their Q1 back in October, where they reported earnings of $2.99, easily beating analysts' expectations, and their revenue of $56.5 billion increased 13%. Their stock does currently have over 30 analyst ratings, and in just the last few days, we've seen 9 analysts reiterate their buys. That includes one analyst from Jefferies, who points to Microsoft's expected year-over-year constant currency growth, which is projected to rise from 12 to 15%. They also believe that Microsoft is well positioned to benefit from the increasing emphasis on artificial intelligence, which, coupled with favorable cloud trends, underpins the stock's upside potential. Impressively, all 31 current ratings on the Microsoft stock come in as a buy. And the average price target comes in at $443 per share for an upside of nearly 9%. Looking down below, we can see all of these most recent ratings coming in the last few days, on the high end with some upsides of over 15% and low-end price targets that are fairly flat here. As we go a bit older here, they do get some downsides as the stock has already surpassed those price targets. Also reporting tomorrow on the 30th is Google parent company Alphabet. They boast a market cap of over $1.9 trillion, trading under the Google ticker GOOGL. They're priced at $152 per share. Similar to Microsoft, they've been seeing some great growth this past year, up 57% and another 22% in the last 3 months. They'll be sharing their fourth quarter results tomorrow, so we're going to get the end of year figures as well. And analysts are anticipating a pretty big year-over-year gain on earnings. The consensus on Wall Street is for earnings per share of $1.59, which is an over 50% increase from last year's. This follows their third quarter back in October, where they did come out with an earnings beat at $1.55 and reported revenue of $77 billion, which was up 11% year over year. The Google stock does not have quite as many analyst ratings as Microsoft does, coming in with 21 current ratings, but we do still have a handful of them reiterating buy ratings ahead of the report. One of those comes from Bank of America. He notes that the Alphabet stock, which has significantly outperformed the S&P 500 in the previous year, is poised to capitalize on advancements in artificial intelligence that could reshape its core search business. Despite challenges such as regulatory risks, their strong position in AI is expected to drive their growth further. They note Alphabet's valuation appears attractive relative to the market given their leadership in AI and a core business trading at a favorable earnings multiple. The Alphabet stock does have a few more mixed opinions on it as well. With 21 current analyst ratings, 16 of those come in as a buy and the rest come in with holds. The average price target comes in just shy of $160 for an upside potential of 4.76%. And looking at the last few days here, we do have all buy ratings coming in the last few, one with an upside of just 1.5%, and on the high end that Bank of America with over 14%. Going back a bit further, a couple buys with downsides, and at the start of the month, one with a downside of 8%. Now, jumping ahead a couple of days to February 1st, we have a handful of other big tech names, starting off with Apple. Trading under the ticker AAPL, they're currently priced at $191 per share with a market cap of $2.96 trillion. Now, they were also seeing some fantastic growth here, but did cool off a bit going into the fall. Overall, they are up 34% in the past year and 12% in the last 3 months. Apple will be sharing their first quarter of 2024, and analysts will be anticipating a bit of an increase year over year when it comes to earnings. But this did follow a fourth quarter where they saw their quarterly revenues decline slightly. As investors have been concerned about waning iPhone demand, the analysts will be anticipating earnings per share of $2.10, which would be ahead of last year's $1.88. This follows their last quarter where they reported earnings of $1.46, which was an earnings beat, and they did see iPhone revenue set a September quarter record, but their quarterly revenue of $89.5 billion was down 1% year over year. Now, just in the last day, we have seen a buy, a hold, and a sell all come out on the Apple stock. That buy rating came from an analyst at Baird, and the firm did acknowledge some risk to March quarter numbers coming off of the holidays, though that noise ratchets up most years. And with valuation still on the higher end, it makes Baird more aggressive on any weakness, and they're expecting solid Q1 results. Then feeling a bit more neutral on the stock with our hold rating was an analyst from UBS. They're anticipating Apple to report December quarter revenue roughly $1 billion above the firm's forecast, driven by 2 to 3 months of inventory build of iPhone units in China. With 31 current analyst ratings, the stock does come in as a moderate buy. It's picked up 22 buy ratings, 8 holds, and 1 sell. And those ratings work out to an average price target of $205 for an upside potential of nearly 7.5%. Here we can see those 3 recent ratings just in the past day. On the low end, we have our sell rating with a downside of 16% coming from Barclays, and an upside here with the buy rating of 4.5%. On the high end, a few days ago, we did a Bank of America coming out with an upside of 17%, and a few others with double-digit upside as well. Moving right along, also reporting on February 1st is Amazon. Trading under the ticker AMZN, they're priced at $160 per share with a market cap of over $1.6 trillion. Their stock has seen growth of 59% in the past year and has grown 20% in the last 3 months. This is another company sharing an end-of-year report with their Q4, and analysts are expecting a big increase in the earnings per share. For the fourth quarter, analysts are looking for earnings per share of 80 cents, which is well ahead of last year's 3 cents per share. And this follows the last quarter where they did come in with earnings of 94 cents, which was a pretty big beat over expectations. The Amazon stock has gathered plenty of attention from Wall Street analysts. It currently has 38 ratings, and in the last few days, we've seen 6 analysts reiterate their buys. That included one analyst from Seaport Research who also increased their price target to $175. The firm remains positives on the shares ahead of the Q4 results, given expectations for accelerating web services growth into the coming year, continued advertising momentum, and expectation for continued operating margin strength. Amazon has impressively received 38 unanimous buy ratings on their stock. And that strong buy consensus comes with an average price target just shy of $188 per share with an upside of 17%. And lots of 5-star analysts weighing in on the stock too, which is great to see. In the last couple of weeks, we have a high-end price target with upside over 30%, and the low end we're sitting here at 5.98%. And last but not least, also reporting on February 1st is the company formerly known as Facebook, Meta Platforms. Coming in with a market cap just over $1 trillion, Meta trades under the ticker META, priced at $400 per share. They've seen massive growth the past year, up 172%, including 32% in the last 3 months. And with that impressive growth, analysts are also anticipating a big jump up in earnings per share year over year for Meta Platforms' fourth quarter. Benefiting from artificial intelligence, analysts are expecting them to report earnings per share of $4.84. That is a huge increase over last year's earnings per share of $1.76. This follows their third quarter where they did report earnings of $4.39, coming in with a comfortable beat. In just the last few days, we've had a handful of 5-star analysts not only reiterate their buy ratings, but also increase their price targets. One analyst from Bank of America weighed in on the stock, saying that the company's robust AI assets are driving performance and there's still room for additional cost-cutting measures if necessary. They predict a fourth quarter revenue and earnings beat, with revenue growth surpassing market expectations. They said that though there is a risk of revenue growth slowing in the coming year, they believe that Meta is well positioned to navigate through this potential deceleration. The Meta platform stock does have 28 current ratings, coming in as a strong buy with just one hold. And with an average price target of $422, the average upside is 5.6%. We can see all those 5-star analysts here recently weighing in. On the low end, we do have a buy with a slight downside as the stock has already surpassed that price target, several around that 12 to 13% upside on the high end. So that is a super quick look at what to expect from these 5 big tech names reporting earnings this week. It seems Wall Street is feeling pretty bullish ahead of these quarterly reports, but let me know your thoughts in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always stick to your own investment plan. Thanks so much for watching. Have a great day, and I'll see you back here next time.